Hey, what's up, guys? This is Sam, and I'm the Director of Equities at Simpler Trading. And today I'm going to be showing you how to use the trend oscillator, which is one of my indicators that will be coming out in January of next year. It's also one of the main indicators that I use pretty much to trade everything. It is one of two momentum indicators that I use. The first one is the high-low oscillator, and the second one is the trend oscillator. We covered the high-low in a different video, but we're going to do a little bit of a deeper dive into the trend oscillator today, just so you can get a feel for it and see how it works under different conditions and kind of what I'm looking for. So just real quick before we dive in, when you have a momentum indicator, most of these charts are only going to show one, and I did this on purpose just because this really is only focused on the trend oscillator. But if you ever see me in the room or on a YouTube video, you'll notice that I actually have two different momentum indicators. The second one kind of looks like this, kind of looks like a sine wave. And I use that one for when markets are sideways, right? So basically if markets are ever trading, within a range like this, and that's actually what markets do most of the time, then I'll use the high-low oscillator to capture those moments so that I can isolate the highs and the lows, and it just gives me a better indication as to when to buy or sell based on the indicator. But the trend oscillator is actually used, as the name suggests, in trend. So just one quick pointer here before I dive in so that you can apply this to your own charts. Most folks will need two momentum indicators. You'll need one that works in chop or sideways markets. I use the high-low. You can use RAF, ready, aim, fire. You can use a slow stochastic, things like that. And then you'll need one that works in trending markets. Again, I use the trend oscillator. You could use something like a MACD, a PPO, an RSI, things like that, and 10x bars, things like that, and they'll work. But I found that the trend oscillator just speaks to me the most, so I'm going to try to show you kind of the different ways that it speaks, and that way when the indicator's out, or if you ever watch me in a video or in the room, you'll have a better idea as to what I'm looking at. So let's start here with just kind of the perfect example of what the trend oscillator does. And this is an XLC 2-day chart. So this is the communications ETF 2-day chart. And you can see here, by and large, you see how the red line is climbing? And every time the green line kind of comes down to the red line, it holds a support. Give it a little bit of room, but you see how every instance of green going down to red, it is supported, and that creates the best uptrend that was in the entire market was this until it broke. It did break finally right there. But this is kind of the quintessential way to look at it. So it kind of helps also if you're looking at a lot of different things, then you can say, okay, this other trend oscillator doesn't look as good as this one. The one that you're looking at right now is perfect, and that's why it's called the perfect trend example. And this is exactly what it should look like. So essentially, when you have something that looks like this, it gives confirmation and strength to the trend. So if you ever have an indicator that looks like this, and I'm going to show you one that doesn't look like this here pretty soon, so you'll have an idea of the disparity between when it's perfect and when it's not. You want to trade things that look like this, especially when they revert back to the mean, which is the 21. Right? Basically, when you have a setup that looks like this confirms that you can continue buying the 21 on that time frame, the 21 EMA, indefinitely until something changes. So this is kind of the quintessential example of when to use the trend oscillator, but there's a lot of different times that it also does other things and works really well. And it actually gets a little bit more exciting than this. So this is the most common one and the most used one. So let's go back. Let's go to the next example. So here is a different example. Now, in the first example, I showed you the XLC, which is the communications ETF, but this is going to be the QQQ. Now, those two look very similar, right? If you go back and you kind of rewind the video, look at the price action here, and look at the price action in XLC. They're very, very visually similar, right? I almost kind of want to show you, but I'm not going to scroll back. You can just rewind the video and catch that yourself. But the price action here on the Qs and the price action on the XLC is almost identical. Notice the difference, though, in the quality of the trend oscillator. Here, you do not have a perfect look. right? And so this is what I mean by being able to isolate between two different similar looking charts. Because if you just looked at XLC and you just looked at QQQ, maybe if you're astute, you'd say the XLC visually is just a little bit stronger. But with this way of looking at it, if you remember what the other one looked like, the green line was perfect above the red. And then every time the green would come down to the red, it would bounce, right? Just perfect. Here, you see how it's kind of all over the place. Sometimes the green line is a little bit above, sometimes the green line is a little bit below. Generally speaking, they're both trending up, but you can see how much sloppier this is. So what's the message here? Well, the message is if you ever have a choice between the first option, which was XLC, which is perfect trend, or the second option, which is the QQQ, very similar in terms of the price, completely different worlds when it comes to momentum. And this is what this uncovers. It uncovers the quality of the momentum underneath the market. So just between these two examples, if you had a choice between XLC and QQQ, which one would you trade? And that's what the indicator is meant to do. So in this instance, there's not really much more here. I just wanted to show you one example of it, very similar price action to a perfect trend, but an imperfect trend structure underneath it. So let's kind of keep going here. So if we know what perfect looks like, then we also should be able to quickly tell what imperfect looks like. And in this case, this is very imperfect. So this is going to be Walmart. Now, again, if you just look at price action, you just kind of draw generically speaking, Walmart generally has an uptrend, right? Generally speaking. At any given point, though, you see how it's just kind of going sideways? If you kind of choose that point here and you just choose the same point here or here, you see how really price hasn't done anything? So generally speaking, it's going up. But then there's periods where it actually does nothing. And do you see how the trend oscillator down here is just a mess, a chaotic mess? That's by design, right? What's the message that it's telling us? Well, sometimes when it's telling us a messy message, that is the message. And in this instance, the message would be, don't trade this. Or if you're going to trade it, don't look for it to trend, just look for a quick pop, sell it, and get out. But this, and again, I would invite you to go back to the very first example and just see how perfect it looked there and compare it to how imperfect and sloppy and ugly this is down here. So not the sexiest example, but it is a necessary example because what this indicator does is it allows you to quickly look at something and say, nope, I don't want to trade that. Whereas if you were just looking at price, you might be able to make yourself kind of a story and say, well, you know, this is kind of going up and, you know, maybe this, maybe that. The trend oscillator would just keep you out of it completely. And it saves you time, and frankly, it'll save you money by just avoiding mediocre setups. So in a weird way, knowing what to avoid is actually as valuable, if not more valuable, than knowing what to play. And the trend oscillator, hopefully you can see it, very quickly shows you that you shouldn't be playing Walmart here as a trend. So let me show you a couple of other cool things that this thing does. So here's an example of TLT. This is the bonds. And you'll see a couple of characteristics first, right? And you'll see how it's behaving like downtrend even before it started behaving like downtrend on price, right? So you see how the price breaks right about here, and then it's never able to get back above the blue line, right? But do you see how the indicator broke before price did? And so ever since the red line started falling, number one, and the green is below the red. So what do we know about that condition? We have a falling red line and the green is below the red. That's not a good condition, right? And you see how it locks in the downtrend all the way through? That's just the indicator doing what it's supposed to do. Here's where it gets kind of neat. You see this low here, and then there's a lower low here, right? So price went down over the course of a few weeks on the TLT. But do you see how this indicator made a low here? And then it actually makes a higher low here, even though price went lower. Notice how that was the low for the market as well, right? So this is basically what's called a divergence. You have price going lower while the indicator actually goes nominally higher between the first low and the second lower low. That means that there's a buildup of momentum that would be completely invisible to you if you didn't have the right momentum indicators, right? So that's why these indicators are so important, because if you just looked at price and you're just looking at highs and lows, that's a much lower low than here. But notice how the indicator was telling you that you actually had more built up momentum here than you do here, right? And also you can see that for now that has been the low. So what do we have? Well, let's put it all together. We have a confirmed downtrend. The indicator's doing what it's meant to do. There's nothing really fancy here about any of that. Then you get this divergence right there. And that's the first time that the indicator is doing something different than what it's supposed to do. So that's a warning sign. Notice that after the divergence, it breaks back above right here. And notice that you still don't have trend. This is still, if you look at back where the green line crosses back bullishly through the red, this is still completely sideways. But notice how the trend indicator is already shifting. That's really cool and somewhat rare. And then notice how after you've gotten above the green, above the red, notice how from there it's actually able to get a pretty big move to the upside. So 3 points here. One, the indicator is doing exactly what it should, and this is just totally common for this phase. Then you get the divergence, low, lower low, low, higher low. That is the first difference. The second difference comes when you get the positive cross, and then from there you get the big pop. And notice how all of this stuff is happening in momentum first and would be completely invisible to folks that are just using price or moving averages. Really cool example there. So here's another one. This is going to be the XLE. This is the energy ETF. And again, kind of a, well, this one's really just to focus on the divergence. So check this out. Here's a low. Here's a lower price low. Right, price goes down. But do you see how the indicator made a low here? And then the second low, which is lower than the first low, happens at a higher level. So the indicator does this. It goes up while the price goes down. Right? And again, very similar to the last example, that is the low. Because from there, you now have a positive coil of energy, right? You can see it just coils and goes sideways and goes sideways and coils. And then guess what? That divergence that was built up, that positive coil, that bullish energy, all of it gets released to the upside. So the biggest clue here, again, these divergences. From there to there, and from here to there. Well before it happened on price. It would be completely hidden to you if you didn't have the indicator and you were just using moving averages. Because if you're just using moving averages, what's really changed here? The moving averages really haven't flipped. They haven't done anything. But price went from 46 to up to 56. So big move there, about 20%. And it was all kicked off by this positive divergence. So here's another example. I like this example quite a bit because it shows the potential of this indicator over a long sample size, which is really helpful. So this is again looking at the ZB. This is the 20-year bond, or the 30-year bond, I should say, 30-year. And again, from right here all the way there, what is it showing you? It's not doing anything that's uncommon, right? The indicator is just showing you that you're in a downtrend. How do you know you're in a downtrend? Well, even if you didn't look at price, is red above green and are both below zero. In this instance, red is consistently above green, bearish. Both are below the middle, bearish. Right? So you know you're in a bear trend. Nothing special there, really. That's exactly what the indicator should be doing. But again, notice the difference here. You have a low, and then you have a much lower low this time. Right? So price actually goes significantly lower here between those 2 points. But again, notice the divergence here. You have this initial low, And then on the second lower low, you see how much higher the indicator is. So again, there's a divergence. Also notice how from here, from the point of the divergence, all the way through, well, pretty much all the way through here, you see how the indicator or price has gone sideways? Look at this. Price is just totally sideways for almost 2 months. In most momentum indicators like a MACD or maybe an RSI or even a PPO, those would all break down. Even 10x bars, actually. I've tested this with 10x bars. This would all break down when you're going sideways like this, because this isn't the condition for a trending indicator, right? This is more of a condition for kind of a range-bound indicator. You can see it very clearly. But notice how the indicator, once it went green, after the positive divergence, you see how even during this period of just crazy chop for months, the indicator kept climbing the whole time. And it kept finding support when the green would pull back to the at higher and higher levels. And then from there, it actually had a very big move. That's really cool. This is actually one of the coolest examples that I have because it shows you everything. It shows you the indicator working as it should. During this phase, it shows you the divergence. During this phase, it shows you the positive cross. During this phase, it shows you the positive consolidation despite the ugly price action during this phase. And all of that builds up to a nice big pop coming up later after that. Just pretty darn cool. And let's see if we have any other examples here. I'll show you this one. I'll just briefly cover it. This is just another example of a divergence. The dollar's up here somewhere now. Just by the way, this is kind of an old screenshot. Now, I've shown you positive divergences between, price goes lower, the indicator goes higher, the indicator wins, and price eventually ends up going higher after that. That's kind of what you've gotten used to with this example. But notice here you have this high. And over here, you have an equal high, right? Let's ignore this price action here for now. All that. Let's just kind of draw a dotted line here between the two highs. You have an exactly equal high between those 2 points. You see how you have a high here that's below 50 or below the center? And then on the second time that the price goes to the same exact level, I'm just going to draw a straight line across. Equal price. You see how the green line's actually higher and the red line's actually higher? That's called a positive divergence. Those are pretty rare. Those are actually pretty rare. But I wanted to include it because it is somewhat rare and it is giving you a very good indication of underlying strength. So the divergence dynamics work both to the upside and to the downside, and they work even before price will show it to you in terms of actually confirming the price. You'll see it confirmed in the indicator just like this. So pretty cool example, I think. And I think that might be the last example. So let's kind of go back to the very first example just so you can remember in most cases what we'll use this for, which is just this. Your goal when you have this indicator, if you choose to, install it on your platform, is to find things that look just like this. If you could just find things that look just like this, green line above the red, both above the middle and both rising, and have this perfect look, you'll be immediately a better trader, right? Because you're going to get rid of all the crap that doesn't look like this, like, for example, this one, which is still a good chart. There's nothing wrong with this chart, but you see how the momentum just doesn't look as good? That means it's suboptimal relative to other things, like the one that I just showed you. Or you can get real nuts and look at this and say, wait a second, this looks completely different than the one I just looked at up here. I would never trade Walmart when there's XLC that had this profile. So hopefully that is helpful, guys, in terms of getting to understand the trend oscillator a little bit better. It's one of the best indicators that I've personally found. I haven't found any other indicator that works in the conditions that I showed you. And I just showed you a lot of different conditions in which this works. And there's very few, frankly, none that I have found personally, momentum indicators that work even when price goes sideways. so that we'll show you the trend, we'll show you the divergence, and we'll show you early, before price does, the change in the momentum. And that's why I like this indicator so much. All right, guys, that's my time. I'll see you for the next video. Have a great rest of your day. Cheers. Hey guys, this is Sam, and I'm the Director of Equities at Simpler Trading. I want to thank you for watching this video, and before you go somewhere else on the YouTube, I'd like to ask that you comment and like the video. It really does help us out with the algorithm and getting the message out to more folks who like to see our content. Also, be sure to click the bell notification and subscribe to our channel so that you never miss anything that comes out. If you want to watch us trade in real time using our own money, come over to simplertrading.com and learn how to sign up. I hope you have a great rest of your day, and we'll see you for the next video. Cheers.